Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Today, September 13th, 2012, has been a huge day for gold and silver and all precious metals, largely due, in fact, to the Federal Reserve's final admission that QE3 is underway. No surprise to us, no surprise to you, certainly no surprise to Nick Barisheff, who is in the precious metals space for decades and has an exact take on what's going on. Hey, Nick, welcome back to financialsurvivalnetwork.com.
My pleasure to talk to you again, Kerry.
And it's great to have you here. So we're talking about three inexorable, irreversible trends and how they affect you. What are those trends? What is going to be the result of them? And what do you do about it?
Well, there's many potential issues that could cause gold price to go up and so on. But the main things are three issues which I like to focus on because it's almost impossible for them to change. One is the fact that the aging baby boomers are starting to retire, and it's the baby boomers that have driven the economy for the past 20 years. They, got out of university, they got married, they had kids, bought houses, bought cars, bought furniture, started making investments, and all that is what we had decent, economic growth through the 70s, 80s, and 90s. Now we're starting to get what is almost like the mirror image of that, because as you start to retire, and even before you retire, you get to the point where you don't need any more stuff. You don't need to spend so much anymore. Your house is bought, your furniture is paid for. Your kids are now on their own. They don't need support. All this kind of thing. And as a result, you start drawing from the system rather than put in the system. You get Social Security, you get pensions. You start withdrawing from your investments to supplement your lifestyle. Your health deteriorates. All these things are happening simultaneously. Those put a great strain on, number one, is taxation drops, GDP drops, employment drops, and the government needs to pay out more with less money. So it's kind of a double whammy. So this is a big, population trend change that is happening right now, and it's going to accelerate because we're just at the tip where the leading edge of the baby boomers are retiring, and I'm one of those. So that's number one. Number two is that we've hit peak oil as far as I'm concerned. Certainly peak cheap oil and peak in terms of production, not peak in terms of reserves. And while we may want to get other energy sources, oil is used for many other things other than energy. Right from fertilizers, all the agricultural issues, transportation, of course, manufacturing, and so on. The list goes on and on. So other than printing money, which the Fed is doing, oil can cause inflation in terms of prices of goods across the board in virtually everything. And we're seeing the price of oil steadily rising. We feel it at the gas pump, and we don't quite feel it in terms of its effect on everything else. But that's the other major trend change. And unless there's a big technological development, and we can stop using oil for transportation, and we'll still need it for all the manufacturing processes, plastics, everything. Mm-hmm. That's going to be an ongoing major inflationary trend. And the last trend, which would be extremely hard to reverse, is that we don't have a temporary high unemployment issue like we had in the past when we had a recession, unemployment spiked. A few months later, it would go back to normal, and so on. we have a systemic unemployment problem. The jobs have been outsourced. They're gone. They're not coming back. The factories have been shut down, and the jobs are away. We can't compete at an average of say $25 an hour in North America to $300 a month in the developing world. It can't happen. So we have those three issues. Eventually, employment will get solved by a shift in technology, by transportation costs, and so on, but not anytime soon. So we got these three major trend changes that are happening more or less at the same time, and the government's in a dilemma in terms of how to not have the deficit go any higher, which the U.S. has hit the 16 trillion debt ceiling again, and the real debt, I've seen different estimates. One is 121 trillion, the other one is 200 trillion of unfunded liabilities. At 121 trillion, that's about $1 million per taxpayer, clearly unpayable.
Sure.
So there's three choices that you have. You default on the debt. I don't think that's going to happen because the U.S. can print its own money, so why default? Secondly, you can raise taxes and reduce the debt. That's not going to happen because the economy is in no shape to raise taxes. You can grow your way out of it, but that's going to be a huge challenge to come up with the policies to grow your way out of it in the foreseeable near future, if at all. And thirdly, you can devalue the currency and print your way out of it and pay off the debt with 2-cent dollars. And this is indirectly what the Fed is doing today, and is going to be continuing to do because that's the only meaningful solution. Jim Rickards talks about it at great length in Currency Wars, that you have to debase the currency. And that's essentially what's happening. As you do that, the gold price goes up, the commodity prices go up, and so on. And a perfect example of that is today. We have approximately 2% rises in gold, a little bit higher in platinum, and nearly 4% in silver in one day. And as I was saying to you earlier, this isn't because everybody suddenly decided to buy jewelry today. Okay, this is not the simplistic view of gold. This is simply the price of gold hasn't gone up as so much as the value of the currency has declined, because they have announced that they're going to print more of the currency, and that's fairly straightforward.
Sure. So what's to stop gold then from going to your $10,000 target?
Well, in my view, nothing, because there's nothing that they can do but continue to print money. They're doing that in Europe. That was announced by Draghi last few days. China is spending $94 billion in new infrastructure. So they're doing it, and so all the countries are, in effect, devaluing their currencies, and it's kind of like a race to the bottom in terms of the currencies, and that's what Jim Rickards calls currency wars. And all the currencies are effectually devaluing against real money, which is gold, silver, and platinum.
Yeah, and platinum's really been on a tear lately too, huh?
Well, to some extent, platinum has kind of a unique supply vulnerability because 80% of the world's platinum comes from South Africa, both production and reserves. And now they're calling for a general mine strike. There was a strike at a platinum mine where striking miners were shot by the police, and now this is growing in terms of civil unrest throughout the entire mining industry in South Africa.
Yeah, pretty scary. They shot a bunch of these guys, and I don't know if if the guys going long on platinum had anything to do with it, but labor unrest in South Africa is a surefire prescription to higher platinum prices.
Well, the real problem in South Africa has been, like in this one mine, there was 3,000 miners, and the rest of the world's mining community has automated.
Right.
South Africa didn't, in order to try and maximize employment. So now they've got these 3,000 employees with, digging in 5-mile deep mines, almost manually, and they want an increase from $500 a month to $1,500 a month. Well, it's not sustainable, and now the platinum gold mines are all stuck with too many employees and want too big an increase, and they should have automated decades ago.
Yeah, but that's what happens when businesses run on a political agenda rather than on a profit-driven business agenda.
Exactly. So this will be an ongoing, problem for the mining industry. As far as gold production, China is the number one gold producer and is keeping all of its gold production. Russia's the number 3, I think, gold producer, and is keeping most of its gold production. So you've got a lot of gold production offline. You've also got central banks that used to sell 500 tons a year into the market are now buying 500 tons a year in very round numbers.
Right.
But that's like a 1,000-ton differential in a situation where mine supply is 2,500 tons. It's huge.
Yeah. Yep. The dynamics definitely favor a higher gold price, which, interestingly enough, gold prices have risen over the past 11, 12 years, and yet there's been a decrease in production. Is there a possibility in the future of production increases if prices get up to $2,500, $3,500 the ounce?
Well, it may very well be, but there's been a number of books. One book I can remember is called Peak Everything.
Right.
And it talks about how virtually in all the major commodities we've hit peak, and we're in decline. It doesn't matter whether it's copper, zinc, gold, or oil. So maybe we'll find gold at the bottom of the ocean or on the moon. I don't know, but so far we haven't.
It's in seawater. Every drop of seawater has some gold in it, and they keep saying we're going to figure out how to get it out of the seawater, and then we'll have more gold than we know what to do with. But haven't seen that one happen yet.
Well, that's right, and the cost of extracting it are many times more than today's gold price. Might be feasible at $10,000 an ounce gold.
Yeah, I kind of subscribe to the concept of peak everything, but what many people think peak means is that there's a shortage, there isn't enough. But that's not really it. It's really, we're talking about a ease of extraction and cost of production issue more than a supply issue. Because if the price goes up high enough.
No, yeah, you're absolutely right. And even very sophisticated commentators are mixing, reserves dwindling versus production declining. And we have enough reserves for the foreseeable future, but not at the production rate we need, and not at the price we are used to or would like it to be.
Exactly, that's the key. So, Nick, well, we appreciate your coming on to FinancialSurvivalNetwork.com, clarifying the existing situation. It sounds like we're just going to be seeing a lot more of the same, huh?
Yes, that's why I think I don't see kind of an out for that, and I've covered this in much greater detail in my book, $10,000 an ounce gold. it's now available to pre-order on Amazon.com. And the schedule is for it to be out on November 1st.
Excellent. That's right around the corner, and that's going to come out around the same time as our book comes out, which is Sweep the Street, Your Guide to Real Wealth. And hopefully we'll both do well on it, because people need to wake up and understand that this is not the world we've been living in the past half century. Things have changed dramatically, and you need to get ready. You need to invest in things that are going to not fall victim to inflation and money printing, and you need to have a plan in place to do all this relatively quickly.
No, you're absolutely right, and a lot of times, people that are pro-gold are, labeled as, lunatic gold bugs and doom and gloomers and so on. But I can, remember a long time ago when I started in the investment business, I read a quote by Robert Ringer, and he says, we need to deal with reality the way it is rather than the way we would like it to be.
Yeah, I try to tell that to my kids all the time, but they just won't listen, right?
That's right. That's right.
Because you want it to be the way you want it to be, which is the way it's always been and the way it's supposed to be. But it isn't going to be that way, which is why you need to wake up.
Yeah,
right?
And you need to deal with the way it is, and still try and maintain an optimistic, positive outlook, because in every crisis and disaster, there's huge opportunity.
Hey, and like your fellow countryman Frank Giustra said in a recent interview, you want to invest in inflation because you can get really rich if you can get money and if you can buy the right things during inflation. It's almost formulaic with very little creativity. It's when we have deflations, it's really tough to make money, because then you really have to be thinking about adding value and doing things like that. Anyway, Nick, thanks for being on. Hey, by the way, if you want to hear this interview with Nick as well as others that we've done with him and get other valuable information, it's financialsurvivalnetwork.com. Nick's site is bmgbullion.com, and a great place to learn a lot about bullion purchasing and ways of protecting yourself. Hey, Nick, been a pleasure. We'll talk to you again real soon.
My pleasure.
All right.
Take care, Gary.
Hey, you too, Nick. Bye.